Hello friends, good week. Vladimir here with you, and this is the weekly review for the 17th of March 2013. Last week was very weird week because the beginning was very quiet and the end of the week was very volatile. The most surprising pairs were related to the pound, and I'm not surprising because I'm not talking about surprising because of the up move. I'm talking actually. Well, we expected the up move. I've been talking about that a lot. I'm talking of the speed and the power of this move. I will talk a lot about this, of course, today. So that's the main things we actually had during the last week. The question is what's in front of us. Let's quickly go over the things again as we talked for the last 2 weeks, actually, at least. And we expected that to happen, and it happened. The pound dollar, I mentioned, if you remember, the 149, 148. It stopped exactly there. We got the 20 candles right. We got a bullish divergence. RSI danced on the 20, beautiful, right? And we are pushing up. The question is, what's next? You know what? I will analyze this one and then I'll continue to other pound pairs. It will be much easier. Now, based on the daily chart, it has more to go. More 20 candles right. It still has all the reasons to rise to the opposite band. Plus, it has a level that it did not test yet, and that's around 152.50. But the interesting thing is we got a small stop right here, which means from technical view, the pound dollar is able to reach 154.50, maybe even higher. Now, if we take all the move, right, and measure the Fibonacci, we get a 154 on the 38.2 Fibo level, right, and 50 even higher. So as we know, after real move, real correction takes us to these levels. But pay attention for this retrace. You see that? It bounced from 23.6 during Friday. So what's next? Well, now the pound dollar will start to develop a bearish hidden divergence. Right? Pound dollar is about to start developing that because this between these two reducing highs that we will get here, right? We will get a bearish hidden divergence. On the stochastic, of course, and on the MACD histogram. But until it happens, most likely we still have other things to go. We will need. Let's take a look on the weekly chart. What do we have there? We got an engulfing, monster engulfing, and it looks like equal tails candle, right? If you don't know what equal tails is, I encourage you go and download it for free, right here. Right here on my blog you have free downloads, right? So you can actually, I'm sorry, let me put it here so you can see that. Okay, free downloads here on my blog. You can actually go and find my book about the candle spot. So what we have here, of course, as I said, is the equal tails. It means the pair most likely will gain some bullish pressure, right? But as we said, it is all correct until it will create a bearish hidden divergence. So how can we get prepared to that? This is a 4-hour chart. On the 4-hour chart, for the first time, between well, if we take this as a high or this as a high, the first time we get a bullish convergence here. So what's about to happen from my point of view now? Pound dollar is going to play around this level. I think it's still able to get a retest of 150.50, 150.45 actually. It's closer to the 20 MA. Maybe even a bit lower, around 149.80. I think there it's about to stop and push one more time to the levels we talked about. Now, if it does this move, it might turn to be inverted head and shoulders, as you can see. Very important level to hold is this trend line and the support I just mentioned, and I'm talking about 149.66. Very important level to hold. In case this is broken, the pound dollar might move even lower, maybe even for all the way for a new low. In case it goes lower, then based on the weekly chart, our next levels to pay attention to will be around 146, then 140, sorry, here 143, 144. That this is the range we'll need to pay attention to. Right? I'm more bullish than bearish for the next, I guess, 2-3 weeks. But again, surprises happened, and surprises still could happen. Pound dollar so far is bullish, and that's how we should get prepared for this buy. Then we have the next pound pairs, and one of them is pound New Zealandian. Very, very tricky one, because based on a weekly chart, it looks like we still have more to go down, right? But from the other side, we still didn't. We're still without even retrace to the 20 MA. Looking at the daily chart, the scenario is a bit more interesting. Let me explain why. If I increase a bit, for the first time between these two highs, as you can see, right? That's a bullish convergence. For the first time, you can see that better on the 4-hour charts, okay, here, between these highs. That's a bullish convergence. So what about to happen there from my point of view? I think it's a double bottom, head and shoulders. From my point of view, that's the bottom, that's the head, inverted head and shoulders, of course. That's the triple spot shoulder. I guess we are going there. There is a trend line here, as you can see, okay, on the same level. From my point of view, this will be, this could be wonderful buy opportunity or rebuy opportunity for the pound New Zealandian, and I would say as long as 180.85, which is the deepest level for the shoulder I could accept, as long as 180.85 will hold, pound New Zealand is still under bullish pressure. And I think two things will help this pair to move higher, and that would be well, the kind of bearish environment press conference that was published on the last week from New Zealand, and of course the strong pound dollar from the last days. That's what I expected to contribute to the up move. So if the pound New Zealand will go, if it goes higher, then pay attention to the 184.70, very important level. If it's broken, I guess we're going all the way to the psychological level 190 or close to that. And breaking above that, I'm still on the opinion that the pound New Zealand will gain all the reasons to move all the way high again to 196. That's my opinion about the pound New Zealand. And that, also, this is a pair I'm talking about, of course, for several weeks now. And remember, such pair has to be traded only investor style, because it's impossible to set a small stop loss here and expect such volatile pair or pairs, all the news pound pairs, to move in our direction. This should be treated as investor style, which means let the pair work. Just keep yourself negative leverage, very, very simple, like in investment, right, for a long run. So in case it's not getting bullish and break down again, remember 175 will be the next level to pay attention to if it makes the break. Then maybe even 170 before huge return up. Anyway, we will pay attention for that, and we'll see how it's acting, how it is behaving. From my point of view, for daily chart to keep going up, RSI has to break 50. RSI has to break 50, and the resistance has to be broken as well. One encouraging sign is that this trend line was broken and now is retesting. So this is kind of encouraging sign from the pound New Zealandian. And the next pair will be the euro against the pound. I've been talking about this one as well several times. Few weeks I'm watching that. I said not once that from my point of view, the day the euro pound will push down again to this trend line, it's actually going a bit higher, right? And will take us back to this range. Okay, I think it's going to happen somewhere during April, maybe May. If okay, maybe sorry, the line, right? Maybe it will take us to end of April, maybe May, maybe even earlier. It could go and drop down all the way, even during March. Everything could happen. From my point of view, the environment is still bearish. And what happened after the divergence? We got a break of this wedge, right? It was 1, 2, 3, 4, 5, 6 spot is a break. Now it is retesting that, so we go for the 4-hour chart and pay attention to this retest. I would say that this level, this range of levels here, is most critical for this retest, right? And I think it has to hold below 087, sorry, 10 level in order to continue down. On the 4-hour chart, we could start and look for a bearish hidden divergence to be created here between the last two highs on MACD probably as well. And here we could most likely will start to get another sell and another continuation based on the rules of this wolf pattern or wedge pattern, isn't how you call it. The target is all the way here, so the pair is expected to go down again till where? Here. And that's the meeting of all the points. It will also 200 moving average also will move like this, right? And probably will meet us here. So I am bearish on my opinion to the euro pound. Now just a quick reminder, the weekly chart. On a weekly chart we're still out of average true range from a weekly chart. All the reasons for a down move. That's a weekly chart, of course. 20 MA has to be retested at least, and most likely again the trend line here, which is around 083, probably 082.50 even. And in case the wedge does not hold and the pair is breaking, then I guess we're going to push to 089, 090, and then we'll get much deeper crash for this pair. Then not for 300-400 points as we expect now, then for 7 or even 800 points. So that's my scenarios for the euro pound, and that's how I plan to trade it, of course. And now for the euro dollar. For a long time I'm talking about this pair, and I said not once I expect the euro dollar to go down. My expectation was correct, sorry. Until Friday, until Thursday, sorry. On Thursday we got a false break during continuing divergence, and more than that, on a weekly chart we have now a bullish hidden divergence. So what does it mean? I have one problem with such pair. RSI broke 50 down, and now it is creating bullish morning star. I don't like morning star when it comes with divergence, even though they work from time to time. For me, the euro dollar has to place itself above the daily 20 MA, and RSI has to go above 50 in order the euro dollar continues higher. How can we get ready for that? Well, that's the 4-hour chart, right? For the first time here, it's testing right now this channel, right? And for the first time, we have here a bullish convergence between these two highs. So if we get this break, then a quick retest of this channel, it could get us the expectation to push higher, and the push higher could take us, back to these levels. It could take us back to 132 or even 133. What has to happen for the euro dollar in order to continue lower? Make a false break of this channel, as I just showed here, right? False break of this channel, daily chart to refuse to create a break above of RSI above 50 and create a bearish candle pattern. All these signs could get us the euro dollar pushing lower to the 200 moving average, or maybe even lower to 127 level. That's how I see the euro dollar. And now for the yen pairs. Dollar yen, after coming closer and closer to 997, also level I've been talking about, for the first time, pay attention to what we have. It confirmed now a continuing divergence between these two highs, and RSI is dancing on this high. We got an inverted small hammer, or whatever they call that, or a kicker. So the expectation to the euro, dollar yen to start the cycle down. Could it still push higher? Of course. But again, the cycle, we are now on March. March and April are very, very uh, bearish months for the dollar yen, so I expected to make the move. We also get more than 20 candles right on a weekly chart. I remind you, last time it happened was here on 2000. We got a 20 candle right, then we got a correction down, then another push, and we all remember what happened since then. I don't think it's about to happen now because we have the intervention. But how long they could intervene, time will tell. Now, as I said, I think natural cycle is about to come. 20 May will be the first potential visit. Then, of course, the next step it will be around 88, 87 level. That's my expectation for the dollar yen. The ways to trade that, well, we have this level. A false break here, a break below this support will open the doors for the down move. So how I think is the most correct to trade, put this line together with this support, break below them together should open the doors for the dollar yen to move lower. This is also expanding wedge, as you can see, right, or something that reminds that. If you have crazy imagination, it could be also head and shoulders, right? But just with a very, very, very weird angle, shoulder, head, shoulder. We gotta get a down move here. As I said, I guess 88 for the first stage. For long run, all the reasons to go. Again, for conservative, that's the way. For aggressive, jump in with the weekly chart, good enough. The trading style here, from my point of view, is of course the investor style, because we're talking here for a long run. Say about all the other yen pairs on a weekly chart, they gaining some stop here. I would not be surprised if the euro yen will try to push a bit higher to 129 or so. I would also not be surprised if it starts a down move back to 118, for example, back to the 20 MA, then maybe even lower. How to go with the down move? Select this support, which is holding several times in a row now. It's even a bit lower here, around 123.30.50, and a daily 20 MA, of course. It has to go below that in order to keep gaining its bearish momentum. And that's my opinion for the euro yen. And for the pound yen, this is a wonderful trend line. A break below the trend line should get this head and shoulders work, right? So if it goes below this trend line, that should be a sign for the pair to continue lower. The expectations, trend line first of all, of course, then I do expect it to go and push lower, closer to the 200 moving average and closer to the trend line. That's my opinion for the pound yen. Well, I could talk about all other yen pairs as well. The scenario is the same. The next pairs I do want to talk about will be the Australian pairs. AUD Canadian. Well, from my point of view, the pair is reaching a top. Why? Daily divergence. What else? Bollinger Bands, sorry, on a weekly chart, right? Bollinger Bands attempt to break, but retrace down. As we can see here, we have resistances around all these levels, and the historical, of course, is also not so far, right? The historical from 96, also not so far. It's pretty there, very close. So could we still push a bit higher before the retrace? Yes, but there is one thing we need to remember. Watching on a daily chart for AUD Canadian. First of all, for a weekly, we are very, very close to getting out of the average true range. Same with daily. We are out of there. So the expectations are to move down again. I do think 104.75 will be the potential first target. Probably then it could break and go even deeper. And so I'm bearish for this pair. And another interesting pair is AUD Kiwi. Well, you know my opinion about this pair. I think it's going to create a top and move all the way down. Now, how can we enjoy this one? Well, RSI on the weekly chart is trying to cross 50. 20 MA was broken and closed above. So what does it mean? From my point of view, we will see some more push lower, then a stop, and I guess then for another time the Aussie Kiwi will rise again. Between these two highs, as you can see, we get a convergence, bullish convergence. So going to the 4-hour chart, pay attention for the bullish hit and divergence. First of all, one here, this is a trend line. Another trend line is here, and there is a bullish hit and divergence forming already. It could be beautiful buy. In case it pushes lower, you remember my first line, and that's my last line. I do think it could drop all the way as until 124, 60, 50 again. It will be also close to the daily 20 MA. Then I think it will stop and rise again. Until where? Well, let's pay attention to the average true range. We are out of the daily chart, so we can expect it down back inside, then push up again until where? As we can see on the weekly chart, there is a room to go. It could take us back to 127.50, could take us back to 128, very, very important resistance. It could take us all the way to 129, 130, which is psychological level. From there, of course, I would expect sell-off again. So my opinion, bit more lower, then up again, and then from these highs, look for a serious sell-off of the pair. Now pay attention to this. To this trend line, okay, or channel, whatever it is. It could go and retest it, of course, before pushing all the way up. So I can go and look to enjoy the small down move until the 4-hour chart completes its bullish hidden divergence. Getting out, let it go higher a bit, and to enjoy from there. A continuation. I mean the next sell-off from the next high, of course. That's my opinion about the Aussie Kiwi. And another interesting pair is Aussie Franc. Well, after getting a resistance here, pushing back, still holding the 20 MA. Watching on a weekly chart, watching on a monthly chart, I think that this pair has all the reasons to go and retest 0.99, probably even the parity level. So I would say it this way: as long as the 0.97 and the 200 moving average still hold, I think it's going to retrace from here, push it higher to the 0.99 parity level, maybe even all the way to 101 again, which will take us back to this trend line. Okay, sorry, even a bit higher here. Okay, that's the one, the two spikes line, of course. Okay, and then I guess we will see a sell-off. So as long as the 0.97 holds, I would look for buy opportunities. 0.99 parity level are potential targets, and I think the last news came from Australia should contribute to this up move. Few words about the indices. Well, you know I'm bearish. It doesn't mean that I don't believe the S&P could go for a new high. It does. It could. But I think the higher the worse. I explained it several times. I will not repeat myself. If you never watched and heard my explanation, please watch my previous weekly reviews. But I think we're on a very, very, very sensitive situation, and I think, as I said, if we will not get a stiff correction before the summer, then I'm afraid something bad could happen. Dow Jones is on a new high. RSI daily chart is aiming closer and closer to the 80. Also, as you can see from the bearish butterfly we have had, right? It's breaking right now out of the box, but the pressure here is still very, 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 very bearish. So as I said, from my point of view, Dow Jones, S&P, all of them. And of course, well, my main wonderful opportunity is the Swiss index weekly chart. So this is a DAX. Swiss. Here, this is a Swiss. Weekly chart is 80 on RSI. Weekly chart. Wonderful bearish pressure. Bollinger Bands duplication. Daily chart, as you can see, bearish divergence. Oh, yes, I know. I'm among the only. Among the only few such crazy bears on this amazing bullish market. But I just think that all the indices lost the connection from the reality, and that's exactly why I think we are in front of something big. I don't think we are going to crash as 2008, not yet, but I think we are creating something. And remember 2008? It happened. It started on 6. It happened on 7, 8. Okay, RSI was playing on monthly chart around the 80 then for several months. Now RSI is getting closer and closer to RSI 80 again. More than that, it's a bearish hidden divergence between these two highs. And this is exactly why I think the Swiss index is one of the most amazing opportunities for a sell. For the DAX, I also keep my bearish opinion, of course, but the DAX still could push a bit higher, maybe for a new high, most likely for a new high. Just pay attention to this line, okay, to this potential wedge it is creating. Okay, here, something like that. Okay, and a weekly chart, of course, there is a monster divergence. Could it still push? Of course, it could, and it's very, very welcome. The higher, the worse. I know it's not easy to see that, but that's what the charts are telling from my point of view. And again, it will take time. I do not claim it's about to happen this week or next week or even until March or April. No. From my point of view, it could last all the way until the summer. No one knows. And I don't want to bet here. As I said, the higher, the worse. Not because I just want the market to crash. No. I just think the market lost connection between reality and the value between of the indices and the stocks, and that's why natural cycle should come. And just few words about some potential stocks. If I do believe indices are going down, Berkshire, from my point of view, is a sell opportunity. Bollinger Band duplication, Bollinger Band around 80 on a weekly chart. Daily chart under heavy bearish pressure. 20 MA will be the first target Berkshire is going to. Then I think it will go all the way to the trend line, which means it's very able to go back to 98. That's for Berkshire. Another interesting thing to pay attention to from my point of view is coffee. Coffee could go and create a double bottom soon. It also could drop for the next low, and next low means between 129 down to 122. But pay attention to the coffee. This is a monster weekly divergence. On a monthly chart, it is continuing divergence. It is band to band on monthly. Coffee is about to create a classical bottom soon. It could take several months, of course, but it's still soon. And for long run, fly all the way high again. So pay attention for this potential double bottom. If it breaks, let it go. No, 129, 122 will be the next level to pay attention to. Of course, I will keep you updated about this. A few more stocks to pay attention to. Coca-Cola, for example, weekly chart, Bollinger Band duplication, bearish pressure, daily chart under bearish divergence, but we can see it still might go and push up for the next high. So watch the next level. It could be 36.60, it could be 37, it could be even 38. We are creating a very, 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 very far top for Coca-Cola. It's about to drop down. Another interesting stock, sorry, to pay attention to. This will be Google, of course, after more than 20 candles ride. We are moving down. Every push up should be sell opportunity until it reaches the opposite Bollinger Band. Just be careful of this bullish hidden divergence forming. Kind of annoying a bit. We also get a first candle on a weekly chart, so that could be a start of the next down move. And that's pretty much the main things of the stocks, and this is all my markets review. As you pay attention, there are many opportunities in front of us. Not short term, not all of them short term. Some of them long term, some of them like investment. But I think that's the best opportunities. They are not wasting our time. We don't need to pay too much attention during the day. We just invest on them, wait, let the market work, and gain profits whenever the market is ready to make the cycle. That's all. That's all, friends. This is my weekly review for this week. I thank you very much for watching that. And sorry it took a bit longer than usually. If you have anything to say, if you have any comment, you are very welcome to leave your comment on the blog, of course. And if you like that, share it on Facebook with your friends. It will be very much appreciated. Thank you very much. Yours, Vladimir.